Yo, the boys, they totally ditched us.
We don't have employees anymore that work.
Good, because now we get the full $2 to ourselves. That's $1 for each of us.
What are you going to do with your dollar? Where are you going to put it?
What can I buy at Cheesecake Factory for $1?
When's the last time you did cheesecake?
Last week.
What cheesecake did you get?
You were supposed to come. Remember, you were supposed to come over or something, but you didn't. So I had to go by myself with the family, of course.
I actually went with my dad to Applebee's. So me and him and my sister, we went there. But cheesecake's way better.
You know, Applebee's sucks now. I don't know. I've been to a couple across the country, and they've really let themselves go in terms of the food quality.
I agree.
I used to like them, yeah. Cheesecake is still pretty good.
Okay, so we have two special guests joining us on the channel today that are filling in for KRIS and Carlos. Both of these guys, you know, their YouTubes will be in the description. First up, we have Tanner. What's up, Tanner?
What's up, guys?
Hey.
Tanner's here with us. And then we have TJ the Wheel Deal.
Yep.
Good to see you, TJ.
How's it going, guys? It's been a minute.
So we all shorting Tesla or what? What's going on?
I started today.
So I think this is going to be a fun pod because we've got two people that know a lot of, well, three people. Obviously, Vitaly's been in Tesla for a long time.
You're like, Vitaly has no Tesla. He doesn't care.
Vitaly paper-handed all of his stuff. Now, like a genius now.
Thank God I took those profits, baby.
Okay, so I think Tesla will be the majority of the discussion. Then I want to get into some PayPal and other stuff. But TJ had a really interesting tweet. TJ, you're thinking of liquidating two positions. I don't want to name them yet, but you're thinking of getting rid of some stuff for Tesla. And Tanner, you have understood Tesla for a long time. Is it a part of your portfolio or it's not?
Oh, yeah. Yeah, okay. Big part.
Okay.
I think all of us now have Tesla, including AMIT with his like 15 shares, right? Is it correct? You have like 10 or 15, I believe?
20. But
20 shares. Okay. Because you paper-handed last time. You got rid of those little puppies. and
okay, so let's start the discussion here. This will be a fun one. One of the biggest influencers on YouTube, meet Kevin, someone we all know really well. He is now short Tesla, even though he owns 36,000 shares of Tesla. Let's start with you, Vitaly. What were your raw thoughts when you saw it?
Okay, so just I didn't see everything. I did see a bit of his video. Is he actually shorting, or he just sold off a portion of his?
Legitimately, I saw his Discord. To his private, it's legitimately shorting. It might be a 1 month thing, but he's legitimately shorting.
All right, so he bought puts, or he's actually shorting the stock. What is he actually doing? Anyone look into that?
I don't know his exact position on that, but I saw a partial bit of his video where he said that he was shorting. I don't know the instrument in which he's betting against.
It could be just hedging his portfolio so it doesn't tank in this volatile time because, well, what I think, I mean, I've been bearish for Tesla for around a year now, at least. I don't know. I have not been buying Tesla. I've only been selling Tesla. I still have a lot of Tesla, but I was wise enough to see that it didn't break through 300 last time. I don't know if anyone's paying attention to some technicals, but the fact that it failed 300 worried me greatly because that was like the third time, it hits a resistance and it fails. So at around 250, 260, I acquiesced a bit and took a bit off the table because Ethereum was pumping. I don't know if you guys pay attention to crypto as well, but I was like, shit, I don't want to miss out on Ethereum and Bitcoin, even though I have it, but I wanted more.
Hold on real quick. Let me just pause you real quick. This guy didn't say he was going to join, but he's here. So,
whoa,
what's up?
I was trying to make it, but I got it. What's up? Look, we got Tanner, we got TJ. What's up?
This is all a Tesla podcast. But so I wasn't too bullish on it, like I said, and I'm still not bullish on it. I still see a lot of downside with Tesla. But having said that, if I had no Tesla, I would be extremely worried. So I posted in our Discord, by the way. We have a Discord for freelancer finance, not finance junkies. If anyone wants to check it out, I think there's a link amid post. But
I'll post it right now. Yep.
People are bearish right now, of course, and I am too. But in terms of the long term, I am not bearish because, like, you just look at the facts on the ground. One, Tesla is still the king of EVs, and EVs are the next wave of what's going on with vehicles. That's just bottom line, the truth. There is no Chinese company coming to take them out. They are basically a monopoly for all intents and purposes for electric vehicles and probably will continue for the next decade, 20 years to be that. So having said that, plus the energy business is ramping up. I'm not even going to talk about full self-driving and all that other stuff. I think that's a long way away, but all these other great businesses are still coming up like energy and the charging network. those are super massive. So even though in the short term, I totally agree with Kevin and why he sold, that over this next year, probably we're not going to have a great year in Tesla. But I can't see a future where 5 years from now, we are not so much higher than today. I just don't see that. And that's why I did not get rid of my entire portfolio. I just decided to go into something temporarily that I know is pumping for this year. And I didn't want to miss that thing, you know?
Okay, let's do Tanner, and then I'm going to get to TJ on the play you did or you're thinking of doing, and then we'll do Carlos. Tanner, do you agree with me, Kevin, shorting or selling his Tesla?
I mean, man, I think that potentially it could be the right play for him. He's done this before where he has bet against the market and saved himself a ton of money. That could be what he's doing here. He could be hedging the short term and end up just building onto his Tesla position going forward. I don't think that he's anti-Tesla in the slightest. Pretty sure he's a big fan of the company. But I personally just don't play that way. And so if you're a big believer, like VITALY said, I'm very much on that same course. EVs are the future. The energy business is going to continue to grow at massive rates. They have infrastructure that potentially no other car, auto company, or anything like this has ever been seen at this scale. It's only going to get larger. From a North American perspective, there's very, very few competitors. Even Elon has said that it's really only Chinese competitors that they're looking at. But that is a massive moat. And so I completely agree with VITALY. 5 years from now, this is going to be a much, much bigger company. And for me, I'm just going to have to stomach the volatility because that's something that I'm comfortable with. But also, I know what I don't know, and I can't play that game of hedging and these sorts of things. So do you, meet Kevin? But I'm going to bow out.
All right. TJ, let's get your perspective. So this is a tweet you put out today. Made a very tough decision and super easy decision. I sold 3,000 shares of PayPal. It pumped 3% today and completely divested from Fiverr. I am raising cash so that Tesla can become my largest holding in the portfolio. Tesla's down 30% year to date. What is the logic behind this? And are you going to start deploying that cash today to Tesla or tomorrow to Tesla?
Yes. I'm already heavily invested in Tesla. It's the third largest holding in the portfolio. And I've got 15 open cash secured puts. I'm at 195 that I'm babysitting, meaning I'm rolling them. I don't have any interest in taking ownership at those levels. And I've got 10 open cash secured puts at 165 that I'm going to be bringing in massive premiums on. But my targeted take ownership of shares is 150. And I would just aggressively sell covered calls against those shares there because the premiums on Tesla are very, very juicy. As far as me, Kevin, he has a knack for timing the market, guys. I definitely don't advise trying to do that. But this guy is a student of the game. We can all say what we want to say. A lot of people want to talk shit and do a lot of things. But the guy's got results. And I always say that it's very hard to argue with results.
Yeah.
You know, results kind of speak for themselves. And he has done these types of things successfully in the past. Will he succeed this time? I have no earthly idea. I'm not willing to do it. I don't like to bet against people like Elon because they tend to pull shit out of the bag and they're, you know, and it just blow up in your face. And I don't have that kind of money to take those types of gambles because that's just not what it is to me. To me, Tesla is a long-term investment. It's my highest conviction play, and it's a 10-year play. But you can be short-term bearish in a company and still have your investment thesis intact long-term. So I think long-term or short-term, Tesla's going to keep shit in the bed for the next 2 quarters. It's just kind of like what we've all known about Enphase. We've all known that we were in for a rough ride for, you know, 60, 90, 180. It might be 365 days. There was going to be an opportunity to accumulate a bunch of shares, kind of like the last crypto winter. And then when shit starts going up, you're going to be like, I wish I had more shares. Well, shit, you had plenty of time to buy. So no, you don't. You didn't have the guts to get in. So shut the fuck up. You know what I mean? You didn't earn the win. You didn't earn the win. So if you want to win with Tesla, this is the time you got to start earning the win. So I've always said I wanted it to be the largest position in the portfolio because I missed out before because I didn't have the levels of conviction before because I hadn't put in the work. I hadn't put in the time to understand the company. And now that it finally just dawned on me, dude, This is a car company with a $19 billion side hustle. You know, it's like an ETF, you know, like I'm excited about Enphase. Well, shit, this company does more business than Enphase's whole business, and it's a side hustle to them. So I'm just like, this is just crazy to me. Like, it's like an ETF in and of itself. And I just believe that it's going to be the largest company in history. And I want to be a big part of it, relatively speaking, right? I'm a real small part overall of the puzzle. But for me in my life, I have a goal. I have a goal to accumulate 7,500 shares. We're a third of the way there right now. But I want to get to 5,000 shares pretty quickly. And then I want to buy leaps. I want to control another 2,500 shares via leaps.
So to push back on that a little bit, and that it'll let me play this, Carlos, before you go, so you can get a chance to see this. I agree. 7,500 shares is amazing, big position, biggest company in the world. But what Meet Kevin's argument is that the timing at 170 is not the best to start getting that. So let's listen to him for like 2 minutes. I have this on 1.75. Quick, let's hear it.
So I hear you, but I'm not trying to buy these shares today. I'm just positioning the portfolio to take ownership of these shares. I'm really hoping that tanks to like 125. I just don't know if the market's going to give me that. So I got to have my bag ready to go today because I don't know when that's going to happen.
Got it. That's fair. All right, let's listen to this, and then Carlos, we'll get your thoughts.
Then you have the risk of lower margins. And a lot of people, like even the Fed's beige book, they're like, oh, we're not really seeing an impact from the disruption in the Red Sea. Well, guess who does get impacted by the Red Sea? Like literally everything has just been designed to take Tesla and ream it. Tesla gets affected by the Red Sea because their shipments from China have to go and the South China Sea have to go through the Red Sea to get up to the German Gigafactory. Well, now they got to go all the way around. It takes 30% longer, double the cost for freight. Great. On top of that, you're getting more incentives on America, 5K supercharging miles, Cybertruck shareholder incentives. That's not a gift. That's to try to finally motivate some more people to spend $100 grand on a truck you know is going to be worth like 70 or 60 a year from now. And so now this doesn't even have to do with the Wells Fargo, downgrade. Who cares? All the analysts, they just downgrade whichever way the stock is going. So I don't really care about that. But there is a real risk of Wall Street still has not updated. Still today has not updated the consensus estimate because it takes long for these analysts all to come in with a new update. They still haven't updated EPS projections. You're still sitting at $3. Okay, well, that's based on 490,000 deliveries in Q1. Troy Tesla thinks we're going to come in like 410,000. If we come in at 420, we're still negative year over year. What if we're negative next year as well? Well, I don't know. It's all speculation. But the whole point is that between now and the end of next year, the tailwind of rates coming down probably isn't going to happen as quickly as we thought. And it's entirely possible that maybe all of a sudden rates come down quicker than we thought. And you know what? Then I'll be right back to buying. And if I have to buy at $200 because, you sold something in the 170s, oh well, so be it. It is worth not getting screwed with this sucker going down. I hate to say it, but we are right now under the 175-ish, 176 fib. You know where the next stop is on this sucker, right? It's not good. You can pray that the next stop is over here at like the 148. But that's not the best trend line, okay? I got like 3 or 4 points of data over here and they're not even that clean. So that's a weak trend line. You know what is a strong support? 101. You know how many margin calls are gonna happen between now and then? I think the Fed, basically think of Tesla as like this dirty coffee stain.
This part is funny.
Napkin, okay? Like it has a lot of potential. I could unfold it. I could go, I could do a lot of things with this. I could make a paper mache, I could do a little robot or batteries or maybe a semi-truck or whatever. But what are we going to do in the meantime with this? Well, we're going to go in over here and go, Red Sea. Oh, interest rates. NEM3 and solar. What else? Elon politics. Oh, Twitter financing. Oh, the lawsuits around the comp plan. Oh, board selling. Oh, no guidance. Oh, okay. What about margin? Oh, okay. Look, FST12, by the way, I got the latest updates. Better. Finally, like I think of it as net better. But are people going to pay 12K for it? No. So what else are we getting? Discounts. More discounts. The Cybertruck list, like everybody I talked to who's ordered a Cybertruck early on, they've already gotten their invite and they're like, yeah, I'm gonna pass for now. So you end up having this like hobium thing, but it really just looks like shit. And again, I'm not trying to be emotional here. I'm just saying I think it's unfortunate the situation Tesla is in. And I don't think all of the bad is priced in yet. So unfortunately.
So obviously he's bearish. Now, Carlos, I know you got a lot to say real quick before I get you in here because we just had this guy join. KRIS, can you hear us?
Yeah, I can hear you guys.
Okay, KRIS, I'm going to give you like 2-3 minutes. Make your point because Carlos probably has a lot to say. So go ahead, say what you want to say, and then we'll get to Carlos. You just heard what Kevin said as well.
Just one thing. I think people forget that the business model is affected by the macro conditions that they're under. There's no way around it. No matter how much you want to say, oh, well, they'll have this breakthrough technology or the consumer, blah, blah, blah. Dude, at the end of the day, interest rates will impact this company. Now, what does that mean? That means that it'll impact it to the downside, but also means it'll impact it to the upside. The real question is Tesla losing its real brand loyalty that a lot of people are having? I mean, I'm seeing EVs come around from all the other manufacturers. I mean, a year or 2 years ago, the only name in town was Tesla. Now you really have a lot of real competition. And I'm telling you, we can't ignore BYD. BYD is doing a great job selling their cars, and every car that BYD sells is one less potential Tesla customer in the future. So until Tesla can really prove itself out to be a, more than just a car company, I think the valuation is going to be somewhat muted, and I think that there's still a lot of room for some downside. So I would not be encouraging anyone to be adding at these prices. I agree with me, Kevin. I think right now the Tesla and Elon Musk are in a very difficult position, but that's nothing to say about their own execution. It just happens to be a difficult macro environment where they are going to be negatively impacted. And if their margins go down to what a traditional auto manufacturer gets, then you're looking at a pretty substantial discount to where it's trading at today. I don't think it ever gets there because they do have some side businesses that have much higher margins, like their energy business, but it's not something completely out of the realm. So do I think that Tesla goes below 150 like I originally said in January? Absolutely. Do I think it gets to 100? It's a real possibility, but if it gets to 100, then best believe you me, I'm going to be adding to a position.
Chris, can you stay or do you have to leave?
No, I could stay. Just don't have a camera. So
Okay. So you're part of the. Okay, so we have a full house. All right, Carl.
Can I ask Chris the size of the purchase that he'd potentially be making at $100 or 150?
I'd probably go straight into options at that point because we do have a lot of positive catalysts in terms of interest rates cuts coming up. I'm hoping that the price can stay muted until after September, which makes sense because the furthest out options will probably be the most mispriced. So that's the way I'd go about it.
All right, Carlos, what do you think about Meet Kevin's short and sentiment around Tesla?
Well, just real quick, just to answer one of Chris's points, like Tesla and BYD are not in competition with each other. They're taking sales from.
You really need to stop doing that, man. Dude, they're both car companies.
Partnering. Tesla is partnering with BYD. Some of their batteries end up in the Model Ys. They're not in competition with each other.
They are in competition if somebody buys a BYD and that stops them from buying a Tesla. That is.
You could say anyone that buys any vehicle is in competition with every maker. But what I'm saying is, in general, they are looking to capture market share from ICE vehicles. That's what BYD's mission is. And also, when we talk about sales from other companies, they are not as profitable on their vehicles. So yes, there are the companies selling vehicles, and you're seeing these things on the road. But if Ford is giving away $40,000 for every Mach-E that they sell, and Lucid is basically giving you a one-bedroom house in Kansas with every vehicle that they make, how can you? That's not sustainable.
Okay, but Carlos buying right now.
Wait, hold on.
Right now that's the question.
Wait. But Fisker is just announcing that they're in talks about potentially going bankrupt. We've heard about Lucid going bankrupt. So the first companies that are going to go are the startups that are having a really hard time making profitable vehicles, and then eventually we're going to see the legacy automotive companies. What I feel right now is that Wall Street, as much as they talk about it being a car company, their real mode is manufacturing, and I think it's going to take some of these bankruptcies for the market to realize that Tesla's real mode is manufacturing, and that's not something that you can just ramp and scale up overnight. And so I think Tesla's lead in this space will become more clear as the years go by, but the next few quarters are going to be shit. So if you've got a position like he's got, which I don't know if he made it clear that he was selling or
he did. I got an email from his fund. He legitimately sold, and
so he liquidated. Okay, I mean, but with the amount of money that he was playing with, and the fact that he's managing a fund where he has some idea of how the next few quarters are going to be, I think it's a smart move. I wouldn't be selling Tesla right now, but if I wanted to protect the position, I think buying puts makes sense to protect that position. But for me right now, I'm comfortable with my position. I've got a pretty good position. To Vitaly's point, if you don't have one, maybe you do start a slow DCA on the way down and set your buy orders for where you think the bottom is going to be. If it gets to $100, I will be buying more, and I'll probably take a page from Chris because I have a good amount of shares. I would probably try to go into options there because they would be the most mispriced and they'd be the most appropriately priced for me to purchase, right? They'd be on the best discount.
Do you think Wells Fargo is correct? 125? Does that make sense to you or no?
I think they are just chasing the direction. I think if the sentiment is bearish, they're going to be 10-15% more bearish than the market, and they're going to be 10-15% more bullish if the market's bullish. But I think in a few years, what Tesla has really done is going to be so clear and so obvious. I think a lot of what we're seeing is the X purchase in an election year, some of that Twitter overhang, and some of people punishing Elon for his views. Guess what? None of those are going to matter in a few years. I think once we're past all of this, in a few years, none of this is going to matter.
So I got a question. Show of hands. In the next 5 years, do you guys think that Tesla is a double from where it is right here, right now?
So that's
in
a
the
1 trillion.
next 4 years. In the next
Oh,
4
I mean, a
years.
double. That's an easy
Yeah.
bet.
Okay, so let me. So I'm
when
just
the
saying.
tech companies
When you
crash,
say 3 years, though, I don't like giving that timeline. It is a double, but I don't know if it's 3.5 years. I don't know if it's 3 years.
No, I'm just saying because the S&P, if you use a regular and ETF or whatever, it's about 5 to 6 years, right? The rule of 72, give or take.
Right.
Mhm.
So I feel like even if you do it right here, I'm not saying do it right here because I think you get better prices. I'm doing casket puts and I'm doing my deal. Don't do what I do because you don't have my skill set. You don't have the bankroll. I'm not condoning to do what I do. I'm saying I could play this game right here, right now, because I've devoted 15,000 hours of my life to get to this point. But all I know is, dude, from right here, if I did nothing and doubled my position right here, right now, I know in 4 years I'm beating the indices, and I put some timely cover calls against it. The premiums are super damn juicy. I'm not only crushing the major indices, I'm crushing them by like probably 30 or 40%, and I'm on chill mode because Tesla is just that company. So, I mean, like y'all are creating stress in a narrative that just isn't going to exist. Are they really going to stop selling cars? That's just, I mean, let's be real, dude. We're talking about a fucking company that's doing 100 billion a year. Net income's what, about 15 billion?
The thing is, within the next 3 to 5 years, the last remaining things in the pipeline are going to be settled. We're going to see what happens with FSD. We're going to see what happens with the bot. We're going to see the Roadster, and we're going to see the 25,000 vehicle. That's it.
And
That's
we're going to have Congress arguing
that's
about
it. Yeah, and they'll be
arguing.
that's it. So that's like the next level up. That's this current growth trajectory. What happens after that, we don't know, right? We
Honestly, all we need is the $25,000 vehicle, and we got an easy double. Easy double.
That's what I was getting at when I say that what their real moat is this manufacturing.
All I'm saying real quick, I'm enamored with trying to pick the bottom. And my thing is, why don't you fucking try to pick a winner first? Pick a winner first and then get in. And then, because you're not going to pick the bottom, dude. Not everybody's KRIS Patel. KRIS Patel has a knack for doing that kind of shit. God bless him. I wish I had half that skill set. I don't. I got to scale in via cash secured puts. And even with that safety net, I fuck it all up. You know what I mean? Like, I'm just saying, even with that 15 or 20% buffer, I still hold bags sometimes because it's hard to do. To pick the bottom is very, very hard to do. So more often than not, you're in another position and it isn't working out. And then by the time Tesla starts running or the end phases of the world start running, you already missed up that run up and you're back to where you were and you're just angry at yourself.
Well, not only do you miss it usually, but as it's going up, you think it's going back down soon.
Right. And you never
you can never get into it. The best thing to do is DCA. In fact, like I said, if I didn't have Tesla, somebody asked Blake or somebody, I would be buying Tesla right now. Today, I was actually, should I be buying back into the shares that I actually had a little bit of FOMO as it was going down. I'm just being patient because I'm standing in a good position, honestly. Like if Tesla does what it does, I don't need any more shares.
But
so
you also have Bitcoin.
Hold on, let me
more money than the Fed.
Hold on. I do have a story about 2018, 2019 when me and Carlos, in fact, started the channel in 2020, I think. But before that, we were discussing Tesla almost daily, like girlfriends. And the narrative was so atrocious for Tesla in 2018 and 2019. You guys don't understand. Like we are nowhere near that. We thought we were going bankrupt. Okay.
Yeah.
We didn't know if the car would actually come out. There was so much more shit happening that was worse. And I was still buying as it was tanking from basically 300 to I think 170 it tanked. And that was a $40 billion market cap, which in our minds was a lot of money, by the way. So it's not like it wasn't a lot. We were like, holy shit, we're dumping a lot of money into this and it's going down.
Who would pay for this valuation for this company? They make no money. Like,
well, why are we doing this? And the simple reason is we saw Teslas starting to pop up everywhere. Now you look at the current present. Okay. After we went through all that, and obviously there was a 20, 30x run up. The same thing is going on. We see more and more Teslas everywhere. They have multiple businesses expanding everywhere. They are taking over people. Everyone in every other car company has acquiesced and went to their charging network. Okay. Literally every company. You guys have to wake up in terms of the narrative. It is intact. There is nothing wrong with this narrative. But then you have to DCA. Hold on. You have to. Let me just finish this. You have to dollar cost average into these quality fucking companies because you were never given this opportunity. Yes, we can hit $100, but if I had no Tesla, I would be terrified. That's my point.
The
Hold on,
issue-
hold on. Let's get Tanner. We got guests here. We got to let them talk. Go
Yeah,
ahead.
I just want to add, I don't think Chris or Meet Kevin or really any of these negative like bear cases are saying that Tesla isn't what it is in the long term. This is short term macro environment bear case, right? That Tesla is not going to be able to hit their targets that they set years ago because right now rates are much higher. People are not purchasing, and they're seeing all of just like that Meet Kevin video. It's paper cut after paper cut after paper cut, and they're just not going to be able to hit their targets as easily. And so in the short term, they're getting repriced. That does not change the 5-year outlook. So, I mean, yeah, I don't think that even Chris or Meet Kevin are changing their long-term thesis. It's just mainly right now.
So let me bring up one point, and then hold on. Let me bring up one point.
Like no one's arguing that. What you're saying is true. No one's arguing that.
But you guys are bringing up the whole idea of these certain points of Tesla is still having strong moats. No one is arguing that.
A lot of people are, by the way, a lot of people are arguing that. Okay. In fact, Chris is arguing that the moat is being disintegrated because BYD is eating its lunch. So there are people who believe the opposite. I know you don't, so you don't consider it as fact, but that is being argued right now. Wall Street completely thinks that.
So in Chris's,
you have to give 12-month outlooks.
In Chris's defense, let me get him into this, and it's a good segue to this. Gary Black tweeted today that there is no way we can justify a 58 price to earnings on Tesla, which is what it's at right now, with single-digit growth. So all of you guys, particularly Vitaly, Carlos, and TJ, are talking about there's all this growth coming. Gary's argument, and Chris, I want you to go first here, then Carlos. Gary's argument is, wait a second, that growth's not coming until we get to the $25,000 car. That's not happening until 2026. So if the vehicle deliveries and the vehicle growth is going to be single-digit year over year for the next 2 years at least, Chris, let's go with you first. What would have to change in regards to Tesla's business so that we don't have to wait till 2026? And can the stock actually get to the 330 level people have on these leaps by 2026, unless that $25,000 car comes out sooner?
Interest rates.
So a couple of things. You have to take this out of like Ferrari's textbook, okay? You have to have high margins. You have to make sure that your costs are under control and that you're generating significant profits above your peers. By going with the $25,000 car, while you will expand your total user base, you're also going to be taking margin hits. There's a reason why a lot of major companies, they try not to do as many sedans and they do more SUVs. If you look at the United States, most of the cars that are sold are SUVs. If they can release an SUV under 25,000, then they're and do it profitably, yes, that's amazing, and they'll probably be able to dominate that space. But from what I can see, that's not necessarily the case as of right now. But once again, Elon is an innovator. Elon can figure out how to reduce costs, whether that be personnel, whether that be, making its own lithium plant in the middle of Texas, developing their own custom batteries so that they're not relying on other companies to basically take away margin, to basically make this as efficient as possible. Also, there's other avenues where they can monetize in the future, hopefully via the charging network, via the energy storage business, that are still a bullish thing for these guys. So
Chris, you're agreeing with Vitaly. The moat is there. You're not denying the moat at all.
No, right? No, my only thing is they have a lot of challenges and they have headwinds right in front of them. And once again, yes, I agree in the short term, BYD is definitely giving them a crap ton of competition. But the reason why is because they're subsidized by the Chinese government. I don't think those subsidies last forever, right? In which case that could be the bull case for Tesla in the future too, where the Chinese government says, you know what, maybe it's time to take a little bit of less of a step in these EVs. So we just have to be very honest with ourselves and ask ourselves, do we want to stay in Tesla with the opportunity cost with so many other companies right now that have tremendous value behind them that you want to go into? Because I know some people that are 80-90% in Tesla, and they've been like that since 2021, which means that they've underperformed the market for the last 4 years, right? Not exactly the greatest thing on the planet. Every time you buy and hold this company, you're also, remember, foregoing any other additional gains that you could be having in significantly undervalued companies in other parts of the market. So keep that in mind.
Carlos, go ahead.
agree with you. And I'm just saying that right now there's a unique position where Tesla is now that company that is depressed and undervalued is what I'm getting at. So if you have shares and you don't want to sell them, then you can buy puts to protect them. But I do think they'll be dead money for a while, but it is a good chance to see this as the same companies that we were buying in 2021, 2022. That's what I'm saying. It comes in waves. The other thing to consider is the $25,000 vehicle, you think, or you would think that they're going to suffer tremendous margin compression. But the purpose of that, and they outlined all of this on the investor day, is that that vehicle will cost 50% less than what a current Model 3 or Model Y costs to make. So they should be able to sell it at a lower price point than either of those vehicles and make even larger margins, something like 30%. So granted, say it's not 50%, say it's only a 40% cost reduction. The point is they should be able to make larger margins and actual more profit per vehicle off of that than they would the other vehicles. This is what I mean by their moat truly is manufacturing. And so there's two things that are affecting all car companies. There's the macro, the economy is not the best right now, and interest rates are really high for people that want to buy them. And then there's the stuff that they can control. So the macro will take care of itself, and that will affect all the car companies. But what happens once that is alleviated and these other companies are still having problem with a fundamental part of their business, that production? That's where I think Tesla will run away with this. And by and large, what you've been seeing is that people don't necessarily want to buy EVs, but they want Teslas. And so I hear that other companies are selling vehicles, but it's not the same as what Tesla is doing right now. And they also have way more touch points after that initial purchase with things like supercharging that will have them continue.
And solar. They keep sending emails about solar, supercharging, charging, whatever. I do want to bring up also EU is now going after Chinese companies with tariffs. I don't know if you read this recently, because they know that the Chinese are subsidizing the cars. Did you guys read this thing?
No, was this today?
Like that, yeah.
There's a link I could share later, but basically now EVs are the different countries are going to go after China. So therefore getting rid of any of that price difference that's happening, because they know what China's doing. Okay. So even better for Tesla once again, because they're not competing in the same way as those Chinese car manufacturers. So I think this whole China narrative is just not going to play out the way KRIS is saying. I don't think most people who look at it, can I get a BYD? Can I get a Tesla? At this point, no. Maybe when it's a $25,000 vehicle, then you have to start competing with BYD. On that part, I get. I think right now, though, that is not the issue. So I think we're talking about an issue that's coming up in around 2026.
Well, price point. This is what we've said about Cybertruck. People saying, oh, the Ford F-150 is outselling the Model X. Well, they're different customers, right? So until they have a vehicle in the same category at the same price point, we won't actually know. But what people are saying, that what people are claiming is proof that Tesla is losing market share, to me, is proof that Tesla is growing the entire industry.
Right.
That's how I see it. They can continue to lose market share, but as long as they continue to sell more vehicles and make them more profitably, I'm fine with them. I'm fine with the long term on this one. But unless we start to see these really depressed prices, $100, I'm looking at this as a time to like really ignore the Tesla position. If I feel like we're really going to get a tank, I might buy some puts, but I'm looking at this as now like, look, I did a lot of this work in 2016, 7 or 18, 19, 20, 21. This is the time to I'll add if I see a really good price, but otherwise I'm just going to let that one sit. It's not done. It's in the oven, still cooking. Meanwhile, I'm looking at other depressed stocks that I'm looking to buy right now. That will be my sales. And
you largely agree with the banks and the funds right now saying to downgrade Tesla.
Yeah,
maybe we don't get to 100, but that's fine.
Yeah, I mean the ideal for me, and this would be even a question for TJ, because you manage a lot of large positions in this sense, is that you want to throw enough of these bets out there on 4 or 5 years return cycles of their own. So after you get through this initial phase of seeding it, every year or so, one of your companies is getting these big gains, and you're able to start rolling these things over and amplifying the gains. But you got to put in the work. It just seems to me like the rest of this year is going to be a good time to put in that work on Tesla, because already know what's going to happen.
TJ, go ahead. But also the question is, when do you want the 7,500 shares to be done by in the portfolio?
Whenever I get my price.
What's
See,
your price?
the thing that I've learned, guys,
$100.
is
$100.
99.99.
The thing is whenever you have money and a plan, you get to dictate the terms of engagement. And I'm not in a hurry to accumulate these shares. If I don't get the right price, I could just make plenty of money selling calls, selling puts, and collecting premium. I've been doing pretty well with Tesla thus far. not holding a real big bag right now. So it's like not really that big of a deal. I think that whenever people rush into these types of positions, that's when you make a lot of mistakes. Like I created a situation to where I freed up a lot of capital so that if the opportunity presented itself, I would be in a position to pounce. If the opportunity does not present itself, I'm just going to keep doing me. I'm going to sell puts. I'm going to sell calls. I'm going to collect premium and just do what I do and let the play present itself. If it doesn't, it doesn't, man. If it does, it does. But I mean, it's not, I'm still long PayPal, we still got the 2,000 shares right there. And then I'm going to buy Leaps because it's more cost effective. I can still control the shares for about 30 to 35% of the cost of the 3,000 shares that I let go. And I have more upside because they reward you for taking on a riskier asset that erodes in time versus owning the shares that don't expire. So I freed up some cash. That way I can sell more cash secured puts with those. And then with Pfizer, I just wanted the shit off the books because I'm like, okay, cool. I don't see you doubling in this time frame. So I didn't see that fear there. And there was just, that $2,100 every 3 months. That wasn't going to be enough to keep me in there. And I was just like, I saw an opportunity, guys. And I've just been doing that. I'm trying to accumulate brokerage cash so that if these guys are right, because I think that they are making a very legitimate argument. I am not disagreeing with anything they're saying for the next 3 to 6 months. But you also got to keep in mind that the stock market is a forward-looking instrument, yes or no?
Mm-hmm.
Mm-hmm.
So at some point, there's going to be a catalyst that they're going to start announcing, and it usually starts happening after hours because it just happens to miraculously work that way, and the shit starts pumping, and we don't have access to any of that.
Well, that's why we're in Robinhood.
Right. but what I'm saying is we always miss out on those types of things, and I just wanted to position myself to take advantage of it, dude. I was just like, and we talk about this opportunity cost. So let's just really analyze that for a second, because it all sounds good and you sound real smart. But there's a thing called realized gains and there's a thing called unrealized gains. So let's say you take money from here and you put it here, and this one pumps and this one dumps. So you're looking really, really smart, right? Can we agree with that?
Yeah, pretty much.
But you got to sell to realize that gain to really be smart, not just to look smart. So if you're just riding that roller coaster to look smart because you want to just get off your portfolio looking real good, just to say that, oh, look, I'm no longer in Tesla right now. I'm over here and it pumped. At some point, you're going to have to figure out how to make that transition back into Tesla. And it's going to be very, very hard to do that because you're going to have to be right twice. And
what do you think of what
I'm just saying it's a tough game. If you have the skill set of the Meet Kevins and the Krises, I think you could pull it off.
Well, I want to point out,
that's an outlier situation that I don't think that there's very many of those people in the chat right now.
Real quick, just a question for everyone because no one mentioned it. What do you guys think of what Kevin was saying about that? Say around the 120 level, there's going to be a lot of margin calls.
Let's get Tanner on that first.
A lot of people that buy Tesla do leverage on margins.
That's probably true.
I'm not the right one to take that question. I don't have much of an opinion on it. I was going to talk about Elon and not betting against a type of first principle thinker. I think
let's do this then. In the chat, answer Carl's question about margin. I also want to have that discussion as well. I got this question in my market close, which, by the way, if anyone's wondering where it went, YouTube got rid of it because for 30 seconds there was some audio that was copyright, so the whole market close was gone. So for those, that's what happened. Okay, so someone asked me this: if you are bag holding Tesla at a 230 average, Tanner, let's start with you. The question was, what the fuck do I do? I have a 230 average emit. I'm holding Tesla. My advice was just, at this point, there's no point of selling. Now you just DCA into it. What would be your advice, Tanner? And then you can talk about kind of betting against Elon as well.
Yeah, I don't have advice for those people. I mean, for me,
what if someone asks you, Tanner? You're on
not
YouTube.
financial advice, dude.
Be like, Tanner, you're a finance guy.
I don't think you've watched my channel enough. If anyone says I have this stock position, I have never given anyone any opinion on what they should do with their shares. I specifically only talk about me. So for me,
so Tanner, if you had a 230 average, if we want to,
I'm holding, baby.
Amit is going to get an answer whether you like it or not.
I'm like, dude, I'm getting
how did we have to ask the question to get there?
Look, I just want to say the answer is simple. if you don't believe in the narrative, you should get rid of it. It's very easy. You
Well,
don't believe what's happening. You don't believe in 5 years it's double the price.
Right.
You just don't believe any of this shit. You were trying to buy into the pump, okay? You should sell it. And I've done that to multiple stocks that I just have no faith in, Palantir being one of them. I just don't believe in it. No matter what happens, no matter how high it goes, I just don't care. And if you are there and you just don't care about Tesla, you should honestly move on. There's no reason to be in it. There's plenty of other stocks. But if you're thinking that, hey, this is a great opportunity. If it goes to $100, actually, it's super undervalued, and only retards are selling it. I don't know if that's PC anymore, but that's what it is. Only retards are selling this stock at $100. You should be the one buying if you really believe the narrative.
But
That's
Vitaly,
it.
if someone has a 240 average and they believe in the narrative, is the argument just you have to?
So the DCAing thing, people get this confused. You don't DCA every $5.
Correct.
Okay, you don't do that. You wait till it's 170, 160, and now you start going in. Then it hits 125. You better be going in harder because you believe this narrative.
It's
And
more
if
of
you're
an
not
average-
going in
it's more of
harder,
an
that means
average
you don't
down.
believe this narrative.
It's more of an average.
Yeah, it's an average down. Yeah.
Yeah, you go in. That is the way I do it. And that is actually what I did with Tesla the first time around. Look, once again, you have to believe in what's going on.
But that's not dollar cost averaging.
No, I do a different form of DCA as opposed to like every week you just put in $10.
You're called value averaging. It's like value.
Yeah,
risk.
exactly.
Call it that.
Okay, Chris, what would you do if someone came up to you and said, so let's say someone's in your Patreon says, Chris, I have a 250 average on Tesla. Would you give them the same advice to value average, or would you say get the fuck out and put it into Celsius?
I don't give financial advice, but if I had a position like that,
I've ruined you guys.
I would wait until the end of the year, look at the price, and if I don't see any traction, I'd tax loss harvest it, and then buy it back 30 days later with a lower cost basis.
Why wouldn't you just average down? What's the logic?
Why not tax loss harvest it against my gains? Because I mean, I got stuff, baby. I'm doing exceptionally well. I need to figure out how to harvest some of these. I need to pump some of these bags, bro. So I got to do what I got to do.
Okay,
That's not a bad strategy, actually. If you still think you're taking a risk, but for the tax benefit, I've done that before too. It's worth it if you know it's going to be stuck for a quarter at least. You can wait the 30 days, but you are taking some sort of a risk if something
That would have
happens
worked for you
fundamentally.
last year, AMIT. Remember, we talked about you doing that with Palantir last year,
Yeah.
and you would have had what 12,000 in losses just sitting there that you could have been able to hold.
That's correct. Yeah. Okay, so Tanner, let's go to that topic. This idea of betting against Elon and first principles. How do you think about that right now?
So this is Chris kind of brought this up in the first place, but this is the same guy that brought EVs to the market, has done its own iron casting for the cars, completely innovated the way that they are building these cars, building their own batteries, going out and trying to mine their own lithium, doing all of these very innovative ways of looking at this company. Now, people can say that EVs of different startups or different companies are catching up to Tesla because they can buy a Model 3 and pull it apart and look at some things that they can copy. The hard thing to copy is what Elon is going to do next. So this is something of the way that I'm holding on to Tesla is Elon is still in the driver's seat, right? So it's not about the innovations of the past 5 years that I'm holding it. It's the innovations of the next 5 years. And this is the same reason why there's no e-commerce builder companies that can catch up to Shopify, and there's no freaking chip companies that can catch up to NVIDIA. And whenever you have those founders that have consistently executed over and over and over, it's very, very hard to bet against them. So what happens in the short term for the price, it might take a dump on my portfolio. But the way I'm looking at it, and this could be wrong, I need to learn a lot more from Chris and TJ. I'm only starting, okay? The way that I look at my portfolio right now is pick companies that won't lose with the founders that are in them in total addressable markets that continue to gain, and governments are backing them and all this stuff. And Tesla falls perfectly into that thesis. So
your philosophy is similar to Vitaly, buy monopolies. That's kind of the same philosophy he has.
Yeah, dude, it's worked unbelievably well. And so I'm going to continue to hold on to Tesla. And if it continues to drop, I'll look to add more. I'd love to get in at $100 a share. But yeah, I would be very cautious about betting against, Elon, because you're looking at some other company, even BYD or something like this. However, that's probably the closest competitor.
I just
And
want to
what
point
other-
out when it gets to $100 a share, most of the people in the chat will not be buyers. Just want to point that out. They will probably be net sellers waiting for $69 to occur.
Oh yeah, absolutely, absolutely. The same people that said that SoFi would hit $3 whenever it was at $4. Whenever.
Good.
Carlos,
And by the way, me and Vitaly were buying Tesla at 100, if you guys remember. It's just I sold out once I got to my price target, and I was like, all right, on to the next. So
On to the next.
I'm more of a
10X.
mercenary when it comes to investing, so it's different.
okay, Carlos, what is the catalyst for Tesla to go up in the next 6 months? If you had to be super contrarian and go against Wall Street, what would be the thing Elon puts out that actually sends the stock to 250 and everyone shuts up?
He's already said that they're going to demo the $25,000 vehicle this year. Oh no, that was the Roadster. I think that's the catalyst. That's the catalyst that everybody wants. I think that's the catalyst that everybody. It makes it really clean and easy to understand. They show a vehicle that's $25,000, 2-seater, 4-seater, 50 kilowatt-hour battery, great, FSD, blah blah blah. I think that's the thing where people go, oh shit, this is real, because now Tesla is in every single category.
What if FSD becomes legit in like 3 months? Like, what if it's like you could buy it for 15,000? Don't you think that would be?
If it becomes, that would be great for the stock, but that's not going to move the stock as much. I just still think there's going to be a lot of skepticism with response to investors. We as shareholders, we know the company, we know how good that's going to be, and we know that they're going to license this to other companies in the future, just like they're doing with the superchargers. But what's going to hit the stock is, I think, if they say we've got this new vehicle. It's being produced in Giga, Texas. It's going to be out in 2 months. Pre-orders start today. Here it is. Here's the colors, et cetera, right? Wall Street's going to love that. Wall Street's going to love that. And you'll see the stock pump right away. More so than if they said that they solved FSD or that the robot's working in the factory. That's an eventually thing.
All right, that's fair. Cool. So let's.
Is that you? Who is that?
That's
I think that's
Chris.
Chris.
You got
I think
some
he has
weird
the
stuff.
speakers on.
I think that means he wants to talk.
Chris, go ahead. You can talk, but turn your speakers
You're in
on.
New York, right? Can we talk about commercial real estate? How it's finally starting to recover? I mean, I know we always talk about Bitcoin and Tesla and Enphase and all these like pie in the sky companies that hopefully one day actually make something of themselves, but really the value is actually in some real tangible assets. Can we talk about that?
Okay, go ahead. What do you want to say?
For a change.
Also, Chris, turn your speaker on, dude, because your mic sounds weird.
Yeah, like where are you? Are you somewhere really loud?
No. I'm in my hotel room right now. It's just through a cell phone, so that's why.
Okay, forget it. I'm gonna mute everything.
All right. So basically, commercial real estate is actually starting to recover. I was in the city this week, and throughout the week, Monday was very slow, but then Tuesday, Wednesday, and now tomorrow's Thursday is starting to come around. But the city looks a lot more livelier. The offices are starting to get a little bit more packed. Now, this is, of course, anecdotal information, but I can tell you, Class A buildings, they are back to being normal again in terms of like patronage. So I say there are a lot of great commercial real estate companies that are probably going to outperform the market in the next few years. They're trading, some of them are trading way below book value and replacement costs. So, it's worth taking a look at that sector in general. I mean, you look at SL Green from what we spoke about, it's almost at $50 range. There's a couple of other commercial REITs that I'm looking at, but I'm looking more on the preferred share side of things. And there are a lot more opportunities there in terms of both growth in capital returns and then also in dividend returns, because they are generating cash flows from their rents. And on top of it, if we start to get any rate cuts in the future, that will bolster their balance sheets even further. So right now, all the smart money is buying up commercial real estate at discounted prices, similar to how in 2008 we had the residential crash and you had all these Wall Street companies buying up homes. Similar things are happening where a lot of real estate funds are buying up commercial real estate assets at deep discounts to what they're likely to be worth in about 3-4 years from now. So
Is that the play? Is it a capital appreciation play, or is it income?
He has to. Okay, yeah.
I didn't hear a word.
Carlos, let me ask you, Chris, every time you're done talking, just mute so that we don't get the echo. Carlos, ask it again.
No, my question was, so okay, so they're buying these things up at the cheap, but the rates aren't necessarily great that they're getting on these unless they're buying them cash. So the question is, are they just making a capital appreciation bet? Are they looking to refinance these things when the rates come down this year, or are they looking at these as income plays?
All three, actually. So one of the things that we're seeing is traditional lenders are stepping away. So the regional and the commercial banks are stepping away. So that's leaving a giant gap for additional PE funds to come in and buy things out. So right now there's a lot of companies that have raw cash sitting on the sidelines that are being raised by, you know, foundations, being raised by family offices. So there is money out there that's sloshing around that these companies are able to deploy and basically capitalize on. And yeah, and I think there's definitely some opportunity there.
What are they seeing? The demand is that they seeing like, oh man, the demand is crazy.
Yeah, demand is starting to return in the commercial office space. I know a lot of what we're seeing in the news is like, oh, commercial office is dead, but you know, regional banks are all going to collapse, like blah 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 blah. But from what I'm seeing, the exact opposite is happening on the ground. But there is a bifurcation. So let me be very clear. There are different types of commercial assets that you're going to have. Now, of course, if you see a strip mall in the middle of a tier 3 city versus a prime real estate office tower in the middle of New York City, you know, you can't give both of them like the same discount. So one of the things that you're seeing is even in LA, you're seeing some of these towers that were sold in 2016, 2017, they're being sold at prices even lower than what they were in 2010. So the replacement costs alone justify the valuation. So it's one of those things where you have to be very selective on which companies and which REITs that you pick up, or which companies that are primarily dealing with the lending side of this. But for anyone that's willing to do the deep dives and research, I think there's a real opportunity that a lot of people might be missing.
Okay, good stuff. So we're gonna do one more topic, and then we're gonna have TJ show off his portfolio and some of the stuff that he's doing in his portfolio right now, some of the moves he's making, and everyone will get to see. I have a podcast with TJ on my channel called Wheeling Options, and he manages a decent amount of money, so we're gonna get to see some of the plays he's doing. Last topic, TikTok potentially getting banned. The Congress or the House passed it. It has to go through the Senate. It was like 360 to 50, so it was overwhelming support. Question is, do you think it gets passed in the Senate? And would you personally, if you were a congressperson, vote to ban it? Let's start with Tanner because he's in Canada. So Tanner, if you were an American congressman, what would you do?
If I was an American,
would you not give congressional advice? Like you don't.
If you were human, Tanner. What?
I was watching the All In podcast, and I think that they had a pretty good take on this that I agree with. Is that, you know, they just caught some Google employee selling data to the Chinese governments and stuff. I think that probably with all certainty, every company probably has some leak or two that is selling information or data. I don't know how hard pressed I'd believe that TikTok is doing that at an expedited rate versus other companies where it's happening all over. I think that it's a guarantee. So personally, I don't really care if they do ban it. I'm going to be making YouTube shorts with all that extra dancing and selling SoFi. So I don't really have much of an opinion on it other than.
But I saw that episode. But the thing was, yes, there is definitely collusion between social media companies and governments. But aren't we more okay with it if it's our government versus the CCP? Like, are we saying that we're okay with another government somewhat hostile having that sort of private information on our citizens, separate from like our own country? That's one thing, but at least they're American companies.
This was the question.
It's already happening.
What do you mean what's already happening?
It's already happening at Google. They're not selling it to American governments, they're selling it to the Chinese government.
Yeah, but because they are like an enemy or a competitor, and they can use that to undermine our interests and undermine our population. They don't have our population's best interest in mind, is the idea.
Yeah, but that's happening at companies that America is not going to ban.
You're saying, okay, right, but the amount of data that TikTok would capture versus one of these other companies is vastly different.
Well, so here's the question to you, Carlos. Here's the question. Do you think they're going to try to ban Twitter if they ban TikTok? Because what Elon's upset about with this bill is that it's not about TikTok, it's about censorship, and they're using TikTok.
Oh yeah. If you read the wording of it, it is very, very, it is something that could potentially come back and try to, because what they're saying if you read the legislation, it's not necessarily about like it being foreign owned, because that's what's missing from it, is the idea that you have to ban these companies that are foreign owned. It's more about how that business conducts its operation, and included in that is everything: website, mobile apps, blah blah blah. And so people are worried that this is something that could be turned against us at a certain point. And yeah, you're right. It could potentially affect X. I would not want to see that, and I would think that there would be a tremendous amount of backlash. But just off the cuff, I do think that we should not have the Chinese government owning that. So what are the rules? They either have to sell it to an American company,
either divest,
60 days, right?
Sell it to
They have 6 months.
Okay, so they have 6 months to either sell the company to an American
Or get the fuck out.
or
But isn't that so weird, dude? If they sell it, it has to be a multi-$100 billion company. The only people that could buy it is an Apple, a Google, a Meta, and then the FTC is not going to allow them to buy
Microsoft.
Well, that's not true. That think about Silicon Valley Bank. Whenever they were forced to sell assets, they sold on pennies on the dollar. If freaking TikTok's got 6 months to get out, everyone's I'm not buying. 1 month, 1 month left. All right, what are you going to give it to me for?
So I think then TikTok wouldn't sell. I think they would be like, we're just leaving then. Forget it.
Okay,
No, they
cool. You
wouldn't
lose the
leave.
whole
They
market.
Listen, Mark's already on the plane. Okay, he's landed and he's talking.
calls from his bunker in fucking Hawaii. You'd be like,
He won't be allowed. He won't be allowed. But yeah, someone's gonna buy it. for
We
sure.
do this in our business all the time. If we know people are forced to leave, they don't have a license to sell anymore, and they have to sell their book, people are vultures. They'll wait till the last second. So either TikTok takes nothing and has to leave, or they divest and take something. They will take something.
all right, but what do you think? Okay, so then just a side question to that. What do you think the effect would be on the American companies that would essentially pick up the slack? And did you guys see that Meta fell 5% because Trump said it's the enemy of the people?
Yeah,
Yeah, but it's basically back. I
it's
mean,
basically back. I thought it was a good dip.
But that's the idea. But the idea, but it's just so crazy how things.
I think it's the algorithms, read these words and push stocks around, and then that's your opportunity to buy these dips if you're interested.
Yeah.
5%.
That-
I don't know if we would consider 5% a dip, but
I mean, but it is for
people
I think
do.
for a big company like Meta, it probably is at this point. It's not Bitcoin. Bitcoin's not Bitcoin dip status, but
Where's Bitcoin right now? Where's
I don't
Bitcoin?
even, dude.
well, congratulations on Hood first of all. So it's $19. I
Yeah,
just took a look.
Congrats, Bill. Not
So
bad.
whoever owns that, congrats. I sold my calls too early, apparently.
You did. You made me sell some of my calls too early as well.
But that's
Loser.
okay. You're not going to go
Okay.
broke taking profit.
You're not gonna go broke. Yeah.
Go broke. That's right.
I had a podcast recently with AMIT where I said, you know what? I actually do think this is going to go to $20+ a share. I think that, you know what? Keep holding AMIT. I think these are going to print. And shout out to Crossroads too. I think he's, I don't know, 10x plus his position or something like this on his options. It's unbelievable. So good for him.
And I just say this, and people may hate me, is that Robinhood is doing in the investment space what people think SoFi is doing in fintech.
What does that mean?
Robinhood's actually doing it.
Yeah, we're in the wrong play. Definitely
Yeah.
so buy with the wrong pick.
What does that mean?
It's a more sustainable business.
Robinhood is experiencing the growth in adoption, the narrative around it that people would want to see out of SoFi.
Well,
Remember,
it's
SoFi
actually
Did you see
Bitcoin.
the February
And,
numbers?
and honestly, it comes down to it's a great app. Like,
Did you see the February numbers? Like, I mean, what are you talking about? They added like 100,000 new members. Like, whenever you compare SoFi
Don't
to
get your
Robinhood-
panties in a bunch.
Oh, I know,
It's
I know.
better
I
business.
said the wrong thing. I thought I was going to get hate.
Let's just talk about this. Let me just bring up one point. SoFi adds more invest.
Oh no, we started an
products.
hour of
No. I actually got to go at 10 o'clock. So this is my leaving
10.
comment, and then I got to leave.
Oh, then he's going to slam the door.
Yeah. SoFi still adds more invest products, like invest accounts, brokerage accounts, than Robinhood does, let alone every other product
The
on their
invest
menu.
app sucks, Tanner. Behave.
Problem.
By the way, I use SoFi as an
422.
invest app as well as a bank, and it's just a nothing burger. It's like, it's like so useless.
But no, I have a question for
I
Tanner.
fucked
Why are
up.
they adding 600,000 members, but people aren't using their invest? Are those members just like getting loans from them? Because Robinhood, it seems like the usage is more.
They bought the
even-
T-shirt
It
at
is.
SoFi Stadium, and they
The,
signed
the
up.
good news about the SoFi app when you invest, you forget you have that money. That's the
Right.
good news.
It's better.
I have not touched those shitty Enovix shares for a long time.
It's a hard wallet for your stock.
They just don't
I
have
think,
options. That's
I
the
think
only
they're
thing.
getting members to take loans, but they're not necessarily getting members to sign up for the brokerage.
Well, you tell me what has higher margins. The answer is loans. They've got like
well,
a
no, well, look, the
Yeah, but it
problem
has
is
no
right
risk
now.
too,
The
dude.
problem is right now. This is the only issue right now. Maybe SoFi is better long term. Bitcoin is pumping. It's going 100,000 plus, and Hood is going to benefit from that. Bottom line, that's it. That's the whole thesis.
Why don't you take a look? Why don't you take a look at the amount of money that they made in February that just released
No,
today?
my point is there's an
No, no, no,
asset
no.
class right now pumping, and people want to jump on that train any way they can because they missed the
Statistics-
original Bitcoin. Okay, so they need these other I'm just telling you what it is.
Statistics disregard your opinion. Look at their crypto volume. It grew, but it didn't grow nearly as much as the crypto
Statistics
market.
disregarded, but the market says I'm right.
Yeah, the
Okay.
Yeah, no, I agree. But I'm also
Dude,
saying the
it's
stock
2.5
will rip
billion,
into the
man.
20s.
That's a
Noto comes
lot of
out,
volumes. I
talks
mean,
about crypto.
Look,
and
at the end of the day, I don't care if the market. I'm sorry, if you love Tesla, I care if the market loves Tesla. Okay, that's at
Yeah.
the end of the day. 5 years, 10 years from now, if the market loves it, I get to retire. Right?
I think it comes down to product. Vlad, people might not like him as much as Noto, but Vlad understands product and he's a founder. This Robinhood's his baby, and I think he knows what he's doing with it. So
Yeah, it's true. That's why he deserves $900 million of stock-based compensation whenever he started the
I
company.
mean, dude, he canceled $500 million of it 3 quarters ago.
Oh, okay. So only 4x higher than Noto then.
If you make a company worth what 30-40 billion, yeah, you deserve $1 billion. Why not? Like I don't.
I'm not anti it. I'm just saying the stock.
Noto's going to get
down
400 million in 2 years if he.
Someone's
executes,
sour. That's all I can tell.
Yeah, I'm just saying I don't like the apples to apples comparison because freaking
I agree. It's not
Robinhood
apples
is
to
bringing
apples.
down stock-based compensation. People are celebrating 17% stock-based compensation as a percentage of revenue. Let's talk some fucking numbers. Like it doesn't make any sense. You
Well, I
know,
agree, it's not apples to apples, but they do have catalysts, which is
Meanwhile, Bitcoin's over the last week, they've made 1,500 new millionaires every single day.
yeah. MicroStrategy is making 1,700
That's true.
Okay. That's good.
All right, so I'm gonna stick around with TJ. He's gonna walk us through a little bit of his portfolio.
gotta go.
Anyone has to go. Tanner, thank you for joining.
Thanks,
Twitter,
guys.
YouTube is in the chat.
Take care, Tanner.
Peace.
Vitaly, Carlos, if you guys got to leave, that's fine. But TJ is going to walk us through what he's doing in his portfolio, so everyone in the chat has a chance to see
Is this the wife's that you sold?
what he's doing.
No,
I'll
this
leave in a minute, but let me see the amount of money this guy has first.
All right, TJ, what are you doing right now at this point in the markets with this portfolio? Go ahead.
So what I'm doing is just trying to balance, man. So got caught. So this is on equity right here. So this is the amount of shares that's owned on these stocks right here. And you guys can see how Tesla's the middle of the pack.
What's the
And
average?
I've always just felt like I need to get it where it belongs, and that's the top of the pack. So I look at this like a little basketball team, you know, because it's 1, 2, 3, 4, 5, 6.
Those are your starting players.
I got my starting 5, and then one of these bad boys has to come off the bench. You follow me? I got my 6 man coming off the
TJ, what's
bench.
the average on Tesla in there?
Yeah, so we're gonna feature Tesla today, right?
And real quick, before you get into this, when we talked offline, you were telling me like Tesla is not the stock that it used to be for this sort of option play. Like the options and the premiums used to be amazing. Because if you
know,
look,
relatively speaking, dude, they're still pretty good. They're still pretty good.
Can you, and maybe we do this offline, but can you give me a comparison between Tesla and Enphase? Because right now they're roughly around the same price. And so, but options on Enphase look a lot better on the sell
Percentage wise, yeah. And I have an intrinsic I got a calculator on my wheel tracker, so we can plug in an option and tells you what it is annualized and stuff. So I mean, I got the tools.
Okay.
So anyway, what I do, guys, is I sell puts and I sell calls and I collect premium. So right now I'm holding a little bit of a bag on Tesla. You know, we got the 2,500 and the average is 196.72, but not all is lost because I got 3 open strategies. So you guys will see there that there's cash collateral of 262,500. So what that means is that there's cash secured puts. And if you follow here, it also says that there's stock collateral, 2,500 shares. So that means that those shares right there are not just a bag collecting dust. They are shares. There's like a house and it's collecting rent via a covered call premium. And that's why you see these numbers right here. So you see the value that if I wanted to free up everything and just not have any open options and just be sitting on 2,500 shares, I'd have to give back $18,500 in premium, essentially. That's how you read the scoreboard in a nutshell.
How much did you collect?
So if you added right here, the 2,740 return plus the 18,000, so it would be about 22,000, give or take a few bucks.
That's what you collected to open those covered call
to have all these 3 positions, and I've got
back 18,000.
I got 10 cash secured puts at 165 that expire at the end of March. So I've agreed. I made a bet with the market saying, "Hey, I'm willing to buy 1,000 shares of Tesla at 165 if you'll pay me some money." And they're like, "Cool, here's $3.21 a share." So my break even on that contract would be $161.80 a share. And I was like, "Awesome!" So you can see there that you just essentially set the money aside. In this case, it would be 165K because everything's a multiplier by 100 when you're dealing with options. So that's how you pocket the 3205 up front for entering into this agreement. It's about a 21-day play. So that's what happened there. And then the other one that I got going on that is the covered call, because I'm like, well, I can't just be sitting on these shares. They got to be bringing in some rent, because y'all are both in real estate. You're not going to go buy a rental property, VITALY, and not put in a fucking tenant, right? Because that would be kind of stupid. So that's the way that I look at these virtual properties is I got to put in a virtual tenant. So I got to bring in some rent via covered call premium. But the difference here versus real estate is I got to put my house up for sale. You don't have to put your house up for sale. You can just put it up for rent. So there's definitely a difference there. So I entered into an agreement with the market saying, hey, I'm willing to sell you these shares for 200 because 200 is higher than the bag I'm holding at 196. So there really is no risk there for me from a standpoint of I would be selling it below my cost basis. And the market's like, cool, I'll pay you money for that. And I entered into this agreement on 3/6. So again, about another 21-day trade. And the market paid me $1.61 a share or $161 a contract. And you guys can see right there that was $4,025. So let's put it into context, guys, because you guys are in real estate. So it's roughly about a $400,000 house, right?
What's the term of that? The length of time on this?
21 days. So let's put it into context because people are always shitting on my covered calls. So I'm glad I got two real estate experts right here, right now.
Hardly.
We got roughly a $450,000 house because how big's the bag, right? The bag is what? Let me look.
625.
770. So $490,000 house. In what world are you going to go buy a $490,000 house and bring in $4,000 of premium in 3 weeks, and you don't have to go clean the house? You don't have any maintenance. You don't have any of that stuff. So there's a lot of merit and validity to what I do as well. And I bought the house for $196.72, and I'm agreeing to sell it for a little profit of $200. And I can also manage the trade. If Tesla shoots back up to 210, 215, I could get out of that contract and I can roll to, I can basically say, hey, you caught me with my hand in the cookie jar. And I could buy to close this contract, sell to open another one a month down the road, go from a $200 strike to like a $220, $230, and I can follow Tesla all the way back up with this covered call, collecting more and more premiums the whole way. So that's what I do on the covered call side of things. And, really works out pretty well for me, guys. So I don't just sit idle on those shares. That's why when they're like, oh, you shouldn't be buying Tesla right now. And I'm like, well, I kind of like collecting $4,000 every 3 weeks. Why don't I want to buy more Tesla? Now granted, if the market will give it to me at 100, I'd rather get it at 100. But if it doesn't, I don't mind adding to my rental portfolio, if you will, because I know that this house is going to double in value in the next 4 years. I firmly believe that. If it takes an extra year, whatever. But in the interim, the rent was good and I'm not going to get an issue. Hey, my plumbing's broken. The electricity, whatever's not working. I don't have any of that shit. I don't got to go paint the house. I don't got to mow the yard. I don't got to do any of that shit. So in my mind, I just feel like it's a lot easier.
I get calls from the Anovix shares every month.
I do want to point out,
yes.
I like we can talk about Anovix tomorrow maybe.
Yeah.
But hold on, to your Tesla thing. I like what you're doing, and sometimes I've done it. By the way, I didn't talk openly about it, but I did the covered calls with Tesla at 250, 260. And I was rolling with these thumbs up. It's so funny. I was doing that actually for, I think, several months that it was going on. And I did get called away at, I forgot, it pumped once to 255, 260, and then it called away some shares, which I didn't mind because the whole objective was for me to not sell my shares, but sell my shares, if that makes any sense.
Right.
Like I was going to let the market take it basically.
Yeah.
And so I think that's okay to do in times of like when you think it's overvalued, because I did think it was a little bit high, right?
Right.
So, but as it goes down, and maybe right now it's fine too, like a 200, but as soon as it hits a certain price, don't you see a problem with it? Like, let's say it goes to 125. I assume you're going to stop the covered calls.
Yeah, I'm gonna, because at that point now I feel like it's a bomb ready to explode. So you stop the covered call campaign.
I got to check, guys.
Like the horses are there. It's at the starting gate. At any point, it's gonna open, and this bad boy's gonna run.
Right, we don't know. Right, maybe it goes to 69, but we just don't know at that point. That point is so low.
I stop the covered call campaign. At that point, I buy leaps because I'm gonna get rewarded 2 or 3 times more versus just owning shares as well.
I agree with you.
So my button up strategy that is not here yet is I buy leaps. So I can show you all the SoFi position in a little bit and show you how I buttoned up that position already as well. But then I also have a cash secured put position that I'm babysitting because I've got it in the money. I've got it at 195. So I've been babysitting this one for a little while already because I got caught a while ago, right? Because SoFi's been tanking. So you guys can see that I agreed to buy it at 195. It's already at 168. So you got to look at the options price. It's 25.95. So you just got to calculate the intrinsic value versus the extrinsic value. So you just subtract the 168 from the 195, and that's going to give you the intrinsic value. And then the difference subtracted from the options price will give you the extrinsic value. And whenever you don't have very much left, it's time to roll, baby, because you're at risk of early assignment.
So you definitely have to roll this, right?
Huh?
You definitely have to roll this.
I will have to roll it unless Tesla bounces, because there's a big area of support at 165. So this is shit or get off the pot time for Tesla. If it breaks that levy, guys, we might see 130, 140 with the quickness. VITALY studies the technicals. He knows what I'm talking about.
Well, I think a bounce it wouldn't be surprising to happen, but I still expect it to go lower after.
Correct, but it's trading in a range, but it's been in a downward trend for the better part of 2 years now.
Yeah.
So
wouldn't you have to roll it regardless? Because the put is for 195. It's definitely not going to be 195 by March 28th.
Correct. But the reason that I'm not in such a hurry to roll is because every day I'm collecting a little bit of this. But you see that delta right there? That delta is going to go. It's almost imitating share ownership because it's a 90 delta. So it's almost like imitating like I already own 1 share of stock.
Right.
So it's getting pretty damn close to rolling. So what would I do? How do I manage this trade? Let's demonstrate a roll. I would just go here to roll options, and I'm like, okay, I got caught. My bad, right? So I'm like, okay, well, let me just add time to the clock. Let me go over here to April the 26th, and let's just stick with 195. Like, how much will they pay me to stick at 195? Because I got to make good on the 25.95, or I could roll for a debit. But I don't want to do that because I know that at some point Tesla will go back to 195. So I don't want to be losing money on the roll. I'm just trying to buy time. So for buying time, I can actually make a net credit of about $1,500. So that's what I'll look to do. Just put another 29 days on the contract, pay me another $1,500, but my collateral still sits there for another, 29 days. And I can't do anything else with that money because it's contractually obligated to at some point buy these 500 shares of Tesla.
So hold on. Let's say we are assuming it's going to 100, just as an assumption.
Right.
Why would you keep 195 and not just sort of go down with it while not making a big profit, but go down a bit further with it? 185, 180.
Because right now I don't know that that's definitive. That's just speculation. I want to let it happen. I mean, I've got to act like I'm from Missouri. It's the show me state, right? So whenever it shows that to me, then I will make that adjustment. If not, I've already demonstrated because of the bag that I'm already holding that I'm kind of okay VITALY owning it at 195 because I'm already doing it. So just add it to the fucking batch and I'll manage it. So again, I only sell cash secured puts on stocks that I'm willing to own. And I only pick strike prices that if I were to go to sleep and not wake up, I have to be okay with whatever result. So it doesn't cause me a whole lot of stress.
Yeah.
Okay.
It just doesn't. Because I mean, at the end of the day, bro, we're talking about Tesla here.
No, I did the same thing. No, not with Tesla. I actually never bought calls or puts against Tesla. I sold the covered calls a couple of times, like I said. But for Enphase, I've always sold puts, and I have not been assigned.
Right.
In
you still have
3 years.
puts.
I still have them. $100.
Go back to
I
this
almost
real
got
quick.
assigned when it fell to 70, meaning like I didn't almost get assigned. It's 2025 or something, but it fell down to 70. I was like, oh, I might get these shares. But even at
Let's-
$100, they
you-
paid me
you're-
$30 or so.
You remember
So,
Enphase? You remember our pot on Enphase, Vitaly?
yeah.
Well, this is what's going on.
My point is I've never been assigned Enphase, which is,
Yeah.
I don't know if that's unfortunate or fortunate. I have no idea, but I've always just collected and super high premiums. I sell leap puts basically. So they pay you like $30 a share, whatever
Right.
it is. So it's
Well,
sort of crazy.
I've been assigned some Enphase, Vitaly.
I know you had shorter term. You had shorter term.
You got assigned those in Vegas, right? We were.
Yeah, and your birthday, I was at the roulette
crazy,
table when the fucking phone started going off, and I'm like, well, I'm not sure if I should just bet on the little 0-0 because I might got a better chance there. You know,
Yeah.
So anyway, this thing was down a lot. It was down like two or three times that at one point, right? Enphase went to like 70 or something like that. So I have an average cost of 139. It's not the end of the world, dude. It's Enphase. They're
No,
making money.
you're pretty close, and I would say Enphase, just to divert for a second, the fact that it is sticking around this price, even if it goes to 100 or whatever, the fact in this terrible, absolutely horrific environment for it, right? Everyone agrees on that part.
Right.
Everyone's super bearish.
Right.
If this is the bearish time, I can't wait till the good times roll again. Whatever
I see some LOLs on the thing, but let's talk about the rental. People always want to look at the bag. This thing prints money on the covered call premiums.
What do you get?
You're down. What I'm looking at is down 235K.
Right, because that's what people look at because they don't know how to read the whole scoreboard.
Okay, so give me the rest of the scoreboard.
I'm looking at how much this bad boy is making me right here. You see that premium right there? We're already up 60%, 78K with $50,000 left of meat on the bone, expiring on 5/17, a 150 call. Last time I checked, Vitaly, 150 is more than 139. Yes or no?
Mm-hmm.
That is correct.
So I'm on easy street with Enphase. If Enphase wants to run, cool. I'll pick up the extra 50,000 anyway. And then now this turns into a big old positive because I'm qualified for about $11.26 of capital appreciation as well, or $10.26, whatever the math checks out to be, of capital appreciation as well. But I don't have any intention of selling all of Enphase at that level. I am going to trim some of the position because we can agree that that's a larger position than it needs to be. But it's just that I got caught. I got caught, so I didn't panic. It's organic. So what I did is I took ownership and I just said, hey, relax. Sometimes the market is irrational.
You're like, baby, relax. We're not fucked, baby.
You're going to sell some covered calls and you're going to bring some money through the door. And then if there's another opportunity, you can sell some cash secured puts, bring some money through the door that way. And dude, our adjusted cost basis, if I can just draw your attention to this little guy right here real quick, AMIT, this is where we've been working with Enphase for a little while. If I can bring you to the wheel tracker. Yep. We've been selling cash secured puts and covered calls here since we got assigned. Our adjusted cost basis on Enphase after you tally up the entire score is $120.61. Pretty damn close to where it's trading at right now.
That's 5x above Vitaly's adjusted cost basis.
Well, it is what it is. But you know, he's the one that introduced me to this play, right? So
I'm so sorry.
He's the one who got you stuck here.
But
it's
no,
funny, when it goes down, I introduced him. When it goes up, it's me, Kevin.
Yeah. But check it out. It's brought in $88,000 in call premium and $121,000 in put profit. So the wheel has generated $210,000. Once the stock recovers, dude, it's been a pretty good stock. I don't control the pricing, but my strategy is bringing in money.
So hold on, you're down 239, but you just showed me it brought in 200. So you're really down 39. That's it.
Exactly. That's what I mean. Our cost basis is 120 and it's trading at what?
129? What? 119?
118, 119. You're down $1 a share. That's it.
Yeah, on 11,000 shares, right? So it adds up.
11 grand. Yeah, there you go.
Yeah. I mean, that's nothing. Being down 11 grand is not that much.
So that's what I'm saying, dude, is people get they blow things out of proportion
Well, I know,
without
but
knowing everything that's going
you
on.
know, you obviously know what you're doing to manage all this risk. I mean, I think I would fuck up all of these transactions personally.
But the reason, guys, that I wanted, that Amit invited me on, is because the reason I wanted to come on is because y'all see that sizing there on SoFi.
Vitaly, if you got to go, I know you can go right now.
I'll go.
This is, yeah.
I will watch the rest of this. TJ, keep going.
Yeah.
But
So SoFi is just too big for this portfolio. We've got 125,000 here, and the cost basis is okay. It's a little higher than I would like, but there's just, you know, 620 in collateral. We've got the stock collateral. We've got a bunch of puts at 750, the covered calls at 950 that are printing money. That part's good, you know, because
TJ, I just got a text. I gotta go. I got a meeting.
No, I got to rock and roll.
Here's what you do. I keep it on. You got 600
Yeah.
people here. Walk through whatever you want to walk through. I'll see when the screen goes black, and then I'll end it. But stay here. I literally text. I gotta take this meeting right now.
Yeah, this will be the last one, man. But appreciate you. Amit. Take care, my
All right,
man.
everybody. Have fun with TJ. His YouTube is in the description, and I'll check you later. Bye.
So anyway, guys, all I'm trying to do is just bring a little balance to the portfolio, guys. So we have, you know, these shares right here on SoFi. So it just dawned on me one day that it just takes so much money to own shares, you know, to have that many shares. So what I've been doing is I've been trimming the positions down a little bit, not because I'm less bullish on these companies, just because I can make more money via cash secured puts. And I can make more money whenever they run with leaps on the call side of things. So I started buying calls right now. So I've got $10 calls for January of 2026. So I just bought the first batch a few days ago, laid out 24K for that. So now I'm controlling 10,000 shares for a fraction of the cost versus laying out, you know, $74,000 to take ownership of another 10,000 shares that way. So I'll be doing that for another 400 contracts there. And then I'll be letting some shares get called away on SoFi just to free up some capital. So on these 950 calls, if SoFi were to go on a run, I would definitely be okay with letting some of these shares get called away. I highly doubt that that's going to happen. So I'm going to be looking forward to collecting another $15,000, $20,000, $25,000 in premium over and over and over again until SoFi goes on this run that people keep talking about that's going to happen. And then by that time, hopefully I'll have already bought the leaps that I'm looking for. And then I can, you know, I'll be able to print money on that side of things because the leaps have a lot more upside potential as well. And that's it. And then I'm still bullish on PayPal, guys. I had to make a decision because I had 5,000 shares of PayPal, but I don't think that PayPal is going to have a meta moment. But I think that Tesla can eventually have a meta moment. So I just wanted to have more monies available for Tesla. So I had to take some monies away from PayPal. So you guys can see right there that I had to get rid, and it was hard because I really believe that this company is so undervalued right now, and they're buying back a lot of the float. So that was very difficult for me. But I did get rid of 3,000 shares of PayPal at $60.78. But then I also have covered calls on for 517 and brought in 44.80 on that at a 67.50 strike, because I wanted to match the cash secured puts that I already have at 60 for 517 that we collected quite a bit of money on as well. And we're doing pretty well on those as well. So that's pretty much all that's going on, guys, in a nutshell, man. But don't be following me into any of this stuff. I have a lot of experience doing this. But the bottom line is I've just been raising cash, guys. This the brokerage cash balance was at like 1.1, and I'm trying to get it to like 2.5, maybe 3. So ultimately, I'm trying to cut the end phase position to 2,500 shares once I'm above the break even on the share price, and then I'm going to put on some leaps on end phase. I'm trying to cut SoFi to either 75,000 shares or 50,000 shares, but I'm going to put on a pretty high amount of leaps as well, some at $7 and some at $10 for January of 2026. I want to double the share count on Tesla, and then I want to buy 25 leaps, probably at $200 or so for January or June of 2026. On Palantir, this one's been good. Palantir has been really, really good. It's been a pretty nice performer in the portfolio, but I got caught with my hand in the cookie jar on some covered calls for January of 2025. And since I'm still on raising cash mode, normally I would be defending these covered calls, but I'm not going to defend them. I'm going to go ahead and just let the shares get called away and eat that opportunity cost, because I'd rather just ultimately put that money into Tesla long term. So that's pretty much it, guys. Those are all the positions in the portfolios. You guys can see, right? It's been an absolute winner. For those of you guys that don't follow the portfolio over on my channel, I can just show you guys this. You guys can just kind of get an idea if you guys ever want to, subscribe or whatever to the channel over there. Full transparency, and I can show you all the tracker here. What this tracker shows you here on the bottom is all the tickers and the total return. So you guys can see 38,000 has been made with Amazon, 8,000 on BABA, 1750 on the Bros, 4,300 on Celsius. CleanSpark made a cool 293. So far, I'm down 26,000 on the Enphase, made a cool 15,000 on Google, 243 on Marathon, 103 on Meta. We're down 13,000 on Neo, 43 up on Open Door because I have some cash secured puts out in the distance, and then made 85.50, divested completely from Pfizer, up 195 on Palantir, but we are not qualified for $65,000 in capital appreciation, so it's going to take that into account as well. PayPal, we're still up 71,000, so we can't complain about PayPal. Right, it's been amazing. SoFi, it's just been so hard to manufacture the win on SoFi, because when you've tied up so much money on shares and the stock just isn't performing, you have to rely on cash secured put and covered call premium to try to manufacture the win. And so far, I've only been able to generate a $25,000 win on Tesla, 47,000. And then I did get my ass kicked on some other stuff to the tune of $250,000. But all in all, up, bless you, baby. All in all, up 1.1 collectively, and I can substantiate it here because that all happened within the last year. So I can just go up here, right here, and just show you all the last year. And you guys can see the last year, and it's roughly, 1053, you guys can read. That's it in a nutshell. That is it in a nutshell. I appreciate each and every one of you guys. Be safe out there, guys. I think that Tesla is going to be the largest company in history. That is my bull case for Tesla, but it's probably not going to happen until like 2030. In the short term, it could see 125. It could see 100. Hell, I don't know. It could see 75. So just please, 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 please be careful. Anyway, TJ, the Wheel Deal signing off as always. May your sky stay blue, stocks green. Peace out. God bless you guys.